Today's video demonstrates that inflation is not real at all, it's an illusion. This is a chart of the pound in gold, the British pound. The British pound is the longest surviving fiat currency at about 300 years. But remember, it wasn't a fiat currency for the whole time. It was on the gold standard for quite a long time prior to becoming a fiat. So now it's a fiat. I've got data going back to 2005 and you can see the price has dropped from 0.2 to 0.00004. That's 4 noughts, which is a horrific 99.98% decline in the value of the Great British Pound when priced in gold. Per year, that's about 37% decline in the value of the pound versus gold. Little gold sovereign from 1889, which used to be £1. The buying power of gold in general has been roughly the same for about 2,000 years. So this was £1 in 1889. To buy one of these now is £540, give or take. This is an old penny, which is made of copper, and you needed 240 of these to make one of them. And then these were the new ones which were brought out in 1971, decimalisation. And interestingly, you can see this one is not magnetic and this one is magnetic, and so is the 2p. Because the Royal Mint became concerned that the price of copper, which was £2,400 per tonne around 1990, would soon exceed, the scrap value would exceed the value of a penny. So they made them from steel with copper plating, and then sure enough in 2006 a penny, the older ones, not these ones, became worth more. So it was about 1.48 pence if you melted it down and scrapped it. So they used steel instead. So pretty soon they'll be doing something else, because the price of steel will then exceed the value as well, so they'll be scrapping everything. So these prices at the top were taken from Diocletian's edict of maximum pricing. 2 chickens, otherwise known as a brace of chickens, cost 0.2725 grams of gold. Now it costs 0.2145 grams of gold. So chicken prices have gone down in the last 1700 years. Is the dollar priced in gold. Data goes back to 1971, and we've got a decline of 98%. Starting from the same place as the pound, we've got a decline of 84.5%, but it's carrying on its direction. It knows where it wants to go. Now we can look at the price of eggs 1700 years ago. 0.0545 grams of gold, and now 0.0322 grams of gold for a dozen eggs. So the price of eggs has fallen by just under 41%. So this is a long-term gold chart, and this is 1980, this is 1920. This was when people were queuing around the block to sell their gold because it was so high, and this is where it got depressed. And during this period, I'm using my words carefully, artificially suppressed the price of gold by short selling it into the buyers, taking out their stops to make them think that gold was not worth bothering with anymore. This strategy doesn't work anymore, because the short sellers are selling to people who are standing for delivery. Private individuals and institutions, they're standing for delivery of gold. Going back again to the times of Diocletian, we're looking at olive oil prices, and they've collapsed by 84% since the time of Diocletian's edict of maximum prices. He was an emperor and he wanted to stop inflation. There were about 1,200 objects that were price fixed, the maximum price. It didn't work because there was a black market, and people who were selling didn't want to be restricted. And President Nixon in 1971, he also tried it. They fixed the price of plywood, for example, so no one was allowed to sell it above X, and the plywood futures started trading way above the actual limit This one's a little bit difficult to understand. The Romans didn't have diesel, they didn't have combine harvesters, they didn't have tractors. They had very cheap labour, or free labour, and horses, but the price of bread has gone up by more than double since Roman times. Contrary to the title of this video, inflation is not real. The hyperinflation fun checklist, which I put on my website, is now ticking every box. We'll look at that in a moment. So what's happening with gold? The UK gold is leaving the Bank of England. It's all headed off to the USA. The gold at the COMEX is being stood for delivery and is leaving America. No one actually knows for sure where it's going, but it is widely speculated that China now has 60 or 70% of the world's supply, currently around 200,000 tons. And the usual way to picture it is that all the gold in the world would fill up 2 Olympic-sized swimming pools. Since the quantitative easing of the post-COVID, roughly 2,200 tons have been stood for delivery at COMEX. They're also talking about auditing Fort Knox for the first time in 40 years. And the usual audit, which isn't an audit at all, the gold is kept in sealed chambers, and if the seal is unbroken, that's the audit. But it's not a proper audit. Every audit is supposed to be checking every gold bar, the serial numbers, the weight, and of course counting how many there are. A lot of speculation is that there isn't any gold there, but I doubt if the general public will ever be made aware of the truth, because if the gold is missing, America will look pretty bad. And the important thing to remember is the golden rule, and the golden rule is the one with the gold makes the rules. This is the fun hyperinflation checklist. Fun being in inverted commas, because it's not funny at all. Does the government have high debt? Yes. Are people concerned about the government's ability to manage the economy? Yes. Is the currency being attacked by speculators? That one you can answer with the gold. If people are buying gold and they're getting it delivered, that means they're losing faith in fiats. So 3 is a yes. Are other forms of stored value getting expensive, such as gold, silver, commodities, metals, real estate, and supercars? Yes. Is there a large recent increase in homelessness? Yes. Are there more than 50% of the population with no savings? Yes. Is everyone complaining about the cost of living? Yes. Are many stocks hitting new highs across lots of different sectors? Last week there was a whole bunch of highs. So you can see that we are in the position where hyperinflation is real. What can we do about it? That's the question. Stop printing money and start doing the right thing. Thanks for watching.